Hello guys, and happy Friday. Welcome back to another video, and today we are going to take a look at the dollar index, US stock markets, as well as AUD, USD, GU and EU from a technical and a fundamental perspective. If you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please smash that thumbs up for the YouTube algorithm there as well. Now let's just jump straight into the data that we have over here. So firstly, we had every hourly earnings came through at a 0.4% month over month. The unemployment, well, the new jobs added was another 261,000, and the unemployment rate was sitting at 3.7%. Now, why is this good for the dollar and bad for the stock market? You have to understand that in order to tame down inflation, what the Fed need to do is hike interest rates, which in return then discourage consumers to spend, which ultimately should send people losing their jobs because people are not spending on companies that is supposed to be making money. The problem that you are faced with here is people are, new jobs keeps getting added. Thus, then puts strains on the Feds to now have to hike the interest rate more aggressively, because why? They need to tame down inflation, and the only way to get inflation back to where the central bank wants it at 2% from the 8.2% that it is now is to keep hiking that interest rates, slow the labor market down, slow the inflation down. But nothing of these two is currently happening, or nothing of these two we are currently seeing happening at the moment there as well. Now let's start right from the top. First things first, right? So firstly, we can see here from this article from CNBC reads that US payrolls had surged by 261,000 in October, better than expected. Hiring remains strong. The unemployment rate, however, went up to 3.7%. Big job gainers industry included healthcare. Average hourly earnings was up 0.4% month over month, and were up from 4% and was up 4% a year ago. Okay, let's continue over here. Okay, the unemployment rate rose 0.2%. Yep. No, this is basically, I'm just looking for interest rates here, but it says here the unemployment rate rose 0.2%, even though the labor force anticipation rate declined 1/10 of a point to 62.22%. An alternative measure of unemployment, which includes discouraged workers and those holding a part-time job for economic reasons, also adds higher to 6.8%. This is what I want. It says here the new figures come as the Fed is on a campaign to bring down inflation, running at an annual rate of 8.2%. According to one government gauge earlier this week, the central bank has already approved the fourth consecutive 0.75 basis point hike that's taking place on the 14th of December. Those hikes are aimed at cooling the labor market, where there are still nearly 2 jobs for every available unemployment worker. You can already see it. Twitter had announced, Elon Musk said he was going to cut 50% of the workforce at Twitter. But we can start seeing here now, Amazon had also announced that they are also pausing hiring for roles in its corporate workforce. An announcement that came after the online retailer said that it was halting new hires for its corporate retail jobs. Also, Apple said they will be freezing new hires there, except for research and development. And the ride-hailing company Lyft reported they will be slicing 13% of its workforce, while online payment company Stripe is also going to cut the workforce. So we can see how, these interest rate hikes are now affecting these companies slowly but surely. And if you live in South Africa, you are at risk to be to get this as well, because why? USA hiked interest rates, we hiked interest rates, and now they are starting to cut some jobs, and then now you can expect us to be cutting some jobs here as well. Okay, so let's go straight into the technical analysis. Now, I do expect a slight correction on the dollar index before the continuation to the upside. However, if we do break and close above this 1300, then it's go home, Jerome, like they would say. But I'm just gonna go straight onto the daily time frame. So, like I said, what's the bias for the dollar index? Long term, still very bullish, and like I said, we can still expect the market to go and hit this high that it had printed there as well. Now, if you start here on the daily time frame, clearly we can see that the market printed this massive impulse, and it's starting to correct itself. If you take your Fibonacci from the low to the high, what do we have here is we got a this level over here. Okay, we've got this structural level here, acted as a level of resistance. The market broke above that, acted as support, broke below that, came to test it as resistance, broke above resistance. Now I can see the market's back to test it as support. Now I do think that the correction is done, because we are currently testing this structural level over here, and I do anticipate that the dollar index to start that move to the upside from exactly where it is now. And I also think that we should see some long liquidity take place here as well in the market also. Yeah, on the not the US, the S&P 500 market broke below this very strong level of support, broken above that, came back to test it as resistance. I do see this take place here as well. So we're going to go based off the technicals, just apply the basic technical analysis. What do I have over here? We have a US 30. Now, if you do remember, I made this breakdown and I said that we can expect the US 30 to break below this level over there. And I said you can expect the market to go, and that is exactly what the market had done. Now, what do we have here? We've got a market that printed the level of resistance, broke above resistance, then tested it as support did not hold. Then we can definitely expect this market to start this move to the downside here as well. If you take your Fibonacci there from the high to the low here, we are already at the 0.382, and we could potentially start seeing that meltdown. But if we don't see it the right away, then we could definitely expect the market to continue slightly higher. The best thing to do is just monitor that price action. Next up, we do have the Nasdaq 100. The Nasdaq 100 printed this overextended information. After an overextended information, you expect to pull back to the left leg before that continuation to the downside. We had this massive impulse. After an impulse, you expect a correction. And the best way to measure that correction is by taking your Fibonacci from the high to the low of the impulse. And you can see that we do have a 0.382 that's lining up perfectly to this structural level that we have over here as well. I do expect a slight increase in momentum and then start that continuation to the downside there once again, as things are not looking good for the companies that are listed on the Nasdaq 100 there as well. Next up, we do have AUD USD, which was requested by one of the YouTube members. Now, AUD USD, as you can see over here, this market here had printed a W formation. Now, after a W formation, this is a W formation, you expect to pull back to the neckline. You expect that pullback to the neckline before that continuation to the upside. But because we expect the dollar to increase in value, I do expect this market to just make a U-turn from exactly where it is now, because I do anticipate this head and shoulders pattern to take place. We also have this massive impulse. We have that correction. And if you take your Fibonacci from the high to the low, we're currently testing this 61.8. We also have this structure that the market created there that's lining up perfectly with that structural level there as well. What I would ideally like to see is a daily break below this level. Would be nice to see. And then from there, we could definitely start looking for that continuation to the downside. So I do expect the AUD USD to definitely continue that move lower. Alternatively, we could just see that, but I highly doubt it's going to happen. It's all about waiting for market momentum to sift berries and then start looking for some good opportunities in the market there as well. What do we have here? We have GBP USD. Now, GBP USD, we can see we have this massive impulse. We have the start of this correction. Also, if you take your Fibonacci there from the high to the low, there is a slight possibility that we could potentially see the market pull back. However, we are currently faced with this structural level that the market had printed over here. All depends on where this daily candle closes. Again, I do anticipate weakness in all currency pairs trading against the dollar index, as I'm expecting the dollar index to increase in value as we're getting ready for the final move to the upside. Next up, we do have Euro USD. The price action on Euro USD is quite similar. Now, on Euro USD, what do we have over here? Firstly, you can see that that the market had printed this massive impulse. After an impulse, you expect a correction. Now, if you take your Fibonacci from the high to the low of this candle that we have over there, you can see that we did get a pullback to the 61.8. If you look left, you can see the market also printed this strong level of resistance, broke above resistance, came to test it as support. Support did not hold, the market broke below support, and we definitely, all of that supports now, so all of that resistance is now turning support. We also have this confluence of the head and shoulders pattern. Now, the head and shoulders pattern is considered a bearish pattern from a technical perspective. So if the market does give us a clear close below this level, then I guess we have to, well, then we can see this market continue lower and definitely look for that long-term selling opportunity as we anticipate the dollar index to go test the previous monthly resistance that it formed many years ago. Thank you for your time. You have a great weekend. And also don't forget, if you need to check out the mentorship, looking for signal services in passing funded accounts, there's a link in the description to the website where you can check that out there as well. Thank you for your time. And as always, cheers for years.